Hey everyone, welcome back to Nadlan Forum Podcast Daily. I'm Ruby and I've got Lior here with me. So if you're tracking mortgage rates at all, you probably noticed it's been, well, kind of eerily quiet this week. We're talking 10-month lows, barely moving a muscle, and the average 30-year fixed rate barely even flinched daily. Lior, do you remember the last time we saw rates just sit like this?
Oh, it's really rare, Ruby. You know me? I live and breathe this stuff, and honestly, it felt almost unnatural. Like, I have clients who check rates obsessively, and one of them called me up. He's in the middle of refi and was like, should I lock in now? And usually I give them all these caveats, warnings about volatility, but this week, I just shrugged and said, listen, nothing's happening. Markets are sleeping.
It's kind of wild, right? We talked about this calm before the storm idea a couple episodes back, but I think even back then the rates were wobbling up and down, just a little. This week it was like less than 0.02%, day to day. You almost want to poke the market to see if it's still alive.
Exactly. And look, it's not like demand just vanished. Buyers are still hoping for that perfect window. But honestly, it's these rare weeks when nothing big is happening on the economic front that let rates settle. No treasury auctions, no big Fed announcements, nothing. Sometimes boring is good if you're shopping for a loan.
And I guess people start to wonder, is now the time? But we all know it never stays this quiet for long. In real estate, calm is usually a sign that someone somewhere is loading the rain clouds.
Yep, and right on cue, next week's just packed with all the stuff that shakes things up. Lots of new economic data dropping after the holiday. And let me tell you, every time we get that jobs report on Friday, that's like putting a rocket under the rates, one way or the other.
It's such a pattern, right? I always forget how quickly the market can move on a single piece of data. Like last month, we saw rates dip just after weak employment numbers, basically overnight. It's jumpy. And it makes me think back to when we talked about timing in an earlier episode. You never really know if you're at the bottom till it's in your rearview mirror.
That's true. The market just reacts instantly. It's not just jobs numbers either. Each day next week has a new economic report that could move rates, even if just a little. And you remember episode 10, right? We talked about how these uneventful periods are just chances to catch your breath before the next sprint.
Yeah, and I think for borrowers or investors, the key is really just being awake. Like, watch the calendar, watch the news, or you could actually miss the best rate of the year while you're still hitting snooze on Monday after the holiday.
Exactly. Every economic report, every data point becomes a what-if moment for rates. It's honestly a bit nerve-wracking, especially if you have a deal that's coming together or falling apart based on tiny changes. The quiet, it never lasts.
So now it comes down to the question everyone's avoiding at family lunch. Do you lock in now or play chicken with the market and hope it drops lower? You could save thousands if you guess right, but oh man, you can lose sleep if you guess wrong.
Ruby, the number of times I've seen that play out, it's wild. Back in 2021, you remember, I had a client who was convinced rates would go even lower, right? He held off for just a few days, and then, boom, a jobs report hit, rates spiked, and his payment jumped by like almost $100 a month. Over the life of a mortgage, that's real money, not just coffee change.
And it's so stressful because you don't want to be the person who locks too early and feels like they missed out, but you definitely don't want to be the one who's stuck after the spike. We always say timing the market is a gamble, not a skill set. Sometimes locking in during the calm is just the safer way to sleep at night.
Absolutely. You just gotta weigh how much risk you're willing to take for that extra 0.1%. And like we've said before, sometimes the best time to make a decision is when things feel boring, because boring can disappear real fast.
So I guess that's a wrap for today. Stay sharp, keep your eyes on the calendar if you're out there mortgage shopping, and remember, next week could look totally different. Lior, Thanks for all your wisdom as always.
Thanks, Ruby. And good luck out there, everyone. We'll be back with more updates soon. Take care, Ruby.
See you, Lior, and see you all next time on the Nadlan Forum Podcast Daily.